I'm going to bring in Dhirendra. Dhirendra, Subir has written in. Now, he's been investing in the Motilal Oswal Most Shares NASDAQ ETF. Now, he tells us, obviously, the tax treatment of that ETF is like a debt fund, so he has to pay short-term capital gains on it after the budget that change that was made that we talked about some time ago. He wants to know, does it still make sense then to hold this fund, or should he pull that money out and invest it in funds like the Birla Sun Life International Equity Plan A? Now, that one does a little bit of Indian equity as well as overseas equity, so it's treated as an Indian equity fund. Which one makes more sense at this point, Dhirendra?
No, the tax treatment of all the open-end international fund or all the open-end fund which invest in US market will be the same as the NASDAQ top 100, NASDAQ 100 ETF, because when you invest in this fund or those funds, they will all be treated as exactly like a debt fund, which is you have to hold it for 3 years to benefit from the capital gains, or to be treated as capital gains, and any gains on these funds for holding of less than 3 years will be treated as your income. I would suggest that don't look at it in terms of finely planning it. I think it's an excellent fund. It is a fund which gives you exposure to a set of companies which are going to be very competitive. They are global leaders and technology companies which are unlikely to be as much affected by the outlook for the US economy. So I'm very upbeat on the prospects of those funds. Of course, it might look not that bright compared to what is happening to Indian stocks, but from the point of view of diversification, it is a meaningful diversification. And all your equity investment must be with at least 3 years time frame. So if 3-year time frame is what you don't have with your equity investment, you should not be investing in any such fund in the first place. So think long term. It's a good fund that you are investing, and if at all and once you have invested every month for next 3 years, then maybe if at all you need to rebalance it, you will have tax-free capital gains entitlement for many of your initial holdings, which you can redeem to rebalance your portfolio.
All right, we have another question from a viewer. Ravi Raj has written in. He wants to make an investment of 10,000 rupees into the NSE. He wants to know what his best options are right now for short-term gains and how many shares he should be buying. Dhirendra, the reason why I picked this particular question is because it's the opposite of everything that you recommend normally. What advice would you give to Ravi Raj right now? What would you recommend he does?
It's a wrong question, and I'm not the right person to answer it. 10,000 rupees to be invested for maximizing return. The simple secret is that if you are able to predict the best performing stock, you should just invest in that stock. But that is a wrong strategy. That is a wrong plan, because a stock on which you bet, if it goes down in value, you will never come back to the market. And market is something which you should try and benefit from. You should not look at market with these expectations. I would say that think of 10,000 rupees investment every month. If you are willing to take chances, invest in a mutual fund. Don't consider investing in a stock directly if you don't know anything, or if you don't know in detail about it, or you know why you are buying that stock. You want to be the owner of that company. If you are just trying to take a punt on that, you can go to a stockbroker and he will help you, try your hand and maybe help you lose that money. But if you want to accumulate savings over many years and profit from this market, consider an equity fund, or consider investing in equity in a manner that you are able to build a diversified portfolio and you have a temperament for it.